The interesting thing that we're seeing now is that most of our commodities, most of the things that go into a Tesla, not all, but I don't know, more than half, the prices are trending down in 6 months, 6 months from now. Now, this could change, obviously, but the trend is down, which suggests that we are past peak inflation.
Elon Musk, why you got to do this to me, man? He believes that peak inflation, it's already behind us, and now the trend is down. So that means that's a positive thing for the stock market. So far, I am being proven incorrect. I made a video a couple of weeks ago talking about the stock market will crash again because of bad earnings. My main hypothesis was that inflation's at a high. That means people are going to spend less money. If people spend less money, then these companies, they earn less money. And if earnings are bad, then all of the investors, they're going to re-rate these investments, and you're going to see the prices come down one more time again. So I was looking at stocks like this one here with Snapchat, where the earnings came out early. They were really bad. Advertising was down. And I was looking at the rest of the companies, like the big ones that are a big percentage of the S&P 500, which means they really impact the S&P 500, like Google and Facebook and Amazon. I thought they would have really bad earnings as well, and this will bring the whole market down lower again. But it turns out the earnings, they're actually pretty good. A few stocks, they were like Snapchat, and they fell off a cliff again. But predominantly, most of the market went up. Like if we look at the S&P 500, it's just been rallying ever since. So what I was really worried about was, yeah, we've been making these moves down. It's gotten quite scary from the top. The S&P 500, it fell 25%. If you're looking at the NASDAQ 100, which is the top 100 technology-focused companies, they have gone down even more. And then if you're looking at like the IPO stocks and the cryptocurrencies and more volatile assets like that, they came down way more than that. But so far, like what I was worried about was earnings would come out and we were in this range here and we would correct even further and it would get really damn scary. So I wanted to just protect myself from that risk. But so far, I'm being proven that that is incorrect. Market has gone up, and that's a good lesson. I've been tracking how often I am correct and incorrect, and it seems like 35% of the time, roughly, I am wrong. And there is no one in the world that's going to be right 100% of the time. So I think the big learning lesson for me is I was just really wanted to protect myself from the downside. I think that the probabilities in my eyes were that the downside was a bigger probability, turned out completely wrong, and we went up. And it kind of relates to this thing here. Like, I like to think like the stock market can mainly go in just like three main directions. You have down, you have sideways, and you have up. So I always like to say to myself, if the market goes down, what happens to me? Does that really hurt me? Does that make me money? What does it do? Right. And you really want to protect your downside so it doesn't hurt you. So, and then if it goes flat, what happens to you? And if it goes up, what happens to you? So, not all the time. If it goes up, that doesn't always mean you make money. Like if you've got short positions on and you're betting that the price goes down and you're going with too much leverage, you can get wiped clean. So, yeah, I just wanted to hedge myself during that time. So far, I had those positions on, so I was hedged. I had a lot of cash. I didn't make any money from this recent rally, and that's a bummer. But if the market did go down again, that if I was completely long and had a lot of long exposure, I'll be really scared. So this is what I did. I wanted to have insurance. I paid for that insurance. So now I was just flat for the month. I think the exact numbers were like I was down 0.1% over the last month. So, I think it's our goal as investors and traders. It's not to always make money constantly. You can never time the bottom perfectly and, capture every single move. Your goal is just to always be around and always survive no matter what. And sometimes, what I've learned is you want to also protect your mental capital. Like if this went down, not only would my capital take a big hit, but it might have been such a big hit that it would mess with my head a bit. And so it would mess with my mental capital. And if you can't think clearly, then that means, your IQ drops. So whenever you're under pressure or stress, your IQ, it's not optimal. So now that the market has rallied, the market is up from low to high. It's about 16%. Michael Burry, who's famous for the Big Short, he's just saying the NASDAQ, a bull market because it is now up 20% off of its low. Who makes this stuff up? After 2000, the dot-com bubble, the NASDAQ did that 7 times as it fell 78% to its 2002 low. And that's 100% correct. Just because the market is up 20%, it doesn't necessarily mean that it's all done. So I believe, the market with the S&P 500 up 16%, I think it's time for a pullback because it's been straight up for the last couple months. The market never just keeps on going up in a straight line. It goes in a zigzag pattern. So it does make sense that, there's a bit of a pullback. I'm not 100% sure. Does that pullback lead to new lows, which it seems like Michael Burry believes in, that we're actually going to go to new lows and the fear will set in again? I'm not 100% sure. My personal strategy with the technical analysis, it hasn't given me a clear buy signal yet, but understanding the flaws of my own system, usually with these market corrections, it can be 6 months late. But I want my system to be late on purpose so I don't get faked in and out of positions a million times, because that could be a recipe for disaster. Like every time the market bounces, then you buy back in. And what happens if it's not, that's not the rally that leads to new highs? And then you go down further again, like what Michael Burry is talking about in 2000. You can get chopped up a million times and really lose a large, significant amount of money. So my system still doesn't tell me to go full exposure to the long side. It will be late, but I want it to be late. So I'm quite sure that the market is, heading up. And then I want to go in with big conviction and make the money back and catch up again. So that's my overall thoughts with the market. I am actually quite confused with what's going on right now. The saying is with the stock market that it's forward predicting. So it's kind of predicting what will happen with the economy and all of that in 6 months' time, roughly. And if I am thinking 6 months out, I think it does make sense with Elon Musk's base case that peak inflation is now behind us because, I'm well and truly surprised with these earnings of these companies. They're showing that they're actually very resilient. So yeah, I think that's pretty much everything with this update. I am quite confused with what's happening now. But yeah, whenever I see something that's worthy of sharing it with you, I'll make sure that I make a video about it. And I'll be bringing back a whole lot of videos about knowledge and lessons and all of this stuff. But yeah, just be careful. You don't want to be putting on extreme amounts of leverage during this time of uncertainty. Just be careful and always protect your downside. All right, guys, that's everything for this video. I'll see you in the next